Hi, I'm Darius McDermott, Managing Director of Fund Calibre. Today I'm here with Chris Bowie, who's manager of two elite rated funds. Firstly, the TwentyFour Corporate Bond Fund and the TwentyFour Absolute Return Credit Fund. Chris, thanks for coming in.
My pleasure.
You manage these two funds, but you have a sort of proprietary system called the Observatory. Can you tell us a little bit about what that is and how it works?
Sure, it's simply a stock picking database. But what it does is it looks at the world of fixed income through a volatility lens. So when we look at any bond, we can see its historic volatility, right, and then we compare that to the yield of the bond. Are we being paid enough yield to compensate you for the volatility you're likely to see? Yeah. So that really elevates our Sharpe ratio.
And in the corporate bond fund, you hold supranationals, subordinated financials, and hybrid corporates. Yes. Will you tell our audience a little bit about each of those type of bonds?
Sure. So supranationals are really just government bonds, right, but they're government bonds from more than one country at a time. A good example being the European Investment Bank. So this is backed by Germany, France, the UK, and they invest in projects like bridges and things, for example. Right. And these bonds trade at very similar yields to government bonds. They have very similar liquidity, but they count still as credit. So that means you can own government bonds essentially as a proxy for credit without impacting your government bond ratings. Subordinated financials are the riskier side of banks and insurance bonds within credit. They're riskier because if that company gets into trouble, you're less likely to get all of your capital back.
Right.
Therefore, you get paid a much higher yield on these bonds. But they can still be very attractive provided you keep the maturity of them low, and they give you a very good balance between attractive yield and low capital risks.
And sticking with the corporate bond fund, you've got around 70% in the UK,
yes,
20% in Europe, and balance or thereabouts in the US. Is that a typical geographic allocation in that fund?
We've often had more in the US and Europe than recently, and it's actually for two reasons. Number one, US bonds are still expensive when you hedge your currency risk. Because the Federal Reserve have raised rates 8 times compared to the Bank of England, yeah, the cost of hedging US dollars has become very expensive. So if they continue to drop rates as they have been doing recently, the difference in hedging costs will lower. That will mean adding dollar bonds to the portfolio can make more sense. But the other reason is because of Brexit. So Brexit has actually made short-dated, sterling-denominated bonds the cheapest credit you can find anywhere in the world. And yes, of course, there are risks around Brexit, but we think if you keep your maturity very short, you can keep the risks low and benefit from this Brexit premium that's kept these bonds cheaper than they should be.
Looking through the fact sheets as we head into the Rugby World Cup, we spotted that you have some exposure to the Oceania region.
Indeed.
Does this mean we're pitching for Fiji or Papua New Guinea or Tonga or one of those regions? What are those bonds?
It's actually Australia. So in my investment grade world, there are a few Fiji.
Slightly more chance of winning the World Cup maybe as well.
Exactly, yes. So in this case, it's actually QBE, which is an Australian insurance company. But in our fact sheets, that region is counted as Oceania.
Okay. Turning then to absolute return credit, you've got a couple of interesting holdings in the top 10. Firstly, Direct Line. Tell us a little bit about that bond, please.
So the maturity on that one looks like 2042, which sounds like a very long-dated bond. But earlier on we talked about subordinated financials, and one of the features of these bonds is they might have very long-dated final maturities, but they have something called a call feature, right, which is the ability of the company to repay that bond at an earlier predetermined date. In this case with Direct Line, the call date for this bond is 2022. So it's actually a very much shorter, exactly. So it's really a 2 to 3 year bond instead of a 20-year bond, provided it is called at the first call date.
Who decides is that called? Is that your decision or is that the issuer, i.e. Direct Line? Right.
Now, normally for reputational reasons, strong banks and insurance companies would usually call their bonds at the first opportunity to call. But what we saw through 2008 was banks that got into difficulties tended not to call those bonds at the first call date. So consequently, you have something called call risk or extension risk, where if it's not called at the first call date, it becomes a longer dated bond. So when you do your credit analysis, you have to look very carefully at both the ability to repay early and the willingness, because sometimes it's a board decision on economic grounds. So there are some banks like Santander, like Deutsche Bank, for example, that say we will only call bonds if it makes economic sense, rather than just for reputational reasons calling it the first date.
But at least you know that in advance, so you can make that put that into your...
Exactly.
And the other one which is quite interesting is J. Sainsbury's, very well-known UK high street retailer, but also a well-known investment. But actually they're a high-yield bond. I would have thought with a company of that stature that they might have been an investment grade, i.e. a less risky bond.
In fact, they are, but they just haven't paid for a rating on this particular bond. So just to be conservative on our fact sheets, we count any unrated bond as high yield because we have very strict limits on the amount we can have in high yield or unrated bonds. So we're actually penalising ourselves by calling it a high yield bond when actually it's really an investment.
You're basically being a bit conservative and cautious on...
Exactly right, yes.
Chris, thank you very much.
Thank you.
For more information on the 24 Absolute Return Credit Fund and the 24 Corporate Bond Fund, please visit fundcalibre.com.